Welcome to In the Balance, the podcast to help you build your dream team of experts to make your financial goals a reality.
G'day, how you going? Phil Tarrant. I am the co-host of In the Balance, which is the podcast that I do with my good friend and colleague, Munzurul Khan, who is the chair of KHI. He's also an accountant. He probably still thinks of himself as an accountant, even though he probably hasn't seen a balance sheet for years these days. But Munzurul, how you going? Good to see you.
Yeah, good to see you, Phil. Good to see you, and thank you very much for having us. Thank you.
Good to see you back. And I'm happy to report, though, that Munzurul still knows his way around a P&L and a balance sheet. He's semi-recently. It's a bit behind us now, but went through rigmarole of doing all my tax recently, and it was good times, good fun. And we're already sort of thinking about we've got to get going again soon for next. And I sit there, I do this every single year. I go, I'm going to do it straight away after the end of the financial year, get it done, get it sorted out, get everything, and I'm always late. So don't worry if that sounds like you. Most of us are like that. Typically, your accountant will give you a kick in the backside if you're not behaving, and Munzurul often does that. But I do enjoy working through, which you might think I'm a bit of a weirdo around this, but I do enjoy working through a set of financial accounts. I learn from it every single time. I get confused even more every single time, trying to understand all the nitty-gritty of different aspects of it all. But my tip to all property investors out there is that you challenge your accountant constantly. If you don't understand something, ask them about it. And if they can't explain it to you in a very sort of simple way, you're probably with the wrong accountant. So, and a good accountant should take their time to ensure that when you sign off your accounts that you're absolutely comfortable with every single bit of it. Just don't assume what's been put in front of you is accurate. You need to stress test it. And by doing that, you become a lot more educated and a lot more familiar and therefore more comfortable with your accounts. And you can start thinking more strategically, therefore how you can continue to invest in properties. So that would be my hot tip. Munzurul?
Yeah, I agree. And the reason I say I agree that it's a two-way process, right? Say in our office, as an example, is that each return, what we do, we've got this process called 3 pairs of eyes. So someone drafting it, one of my manager reviewing it, and then I'll be reviewing every single return which I look after in my group or any other partners. So we go through that 3 pairs of eyes, and then what we do is that we run through with the clients individually, saying that we've done all of those, we've done this 1, 2, 3, 4. We go through every single line item to the best, right? And say that, have we missed anything? Or was there anything else as such? So we encourage that conversation on a two-way process. And the reason why we do that is that very often when the client looks through, the client says, oh, sorry, I haven't given you this, right? Or from our point of view is that basic things such as say you haven't given us insurance, you haven't given us 2 lots of council rates, right? Or your property got settled, it's a new property, you haven't given us the settlement adjustment. And your LMI, as an example, that it may have been capitalized, but you haven't given us the LMI because you haven't really paid it. You did pay it through the capitalization, but you physically haven't paid it. And I think the conversation is the one which picks up all of those.
Yeah, you need to work on this, and if something doesn't feel right, typically isn't right. So if the number doesn't look right, typically there may be things missing out of it. And I think even when you prepared my accounts this year, I said, oh, that number there just doesn't look right for some reason. We interrogated it. I think we missed a bit of revenue or somewhere or other. I can't remember exactly the nuance of it.
That's right. And then you got to also look through the benchmarking side of it, right?
Yeah.
You got to look through the ATO data matching side of it. The return that we do is that we do it with the assumption that every return is subject to review. It's a self-assessment system, right? But ATO can review any of those returns. And they can review that over 5 years, or they can even extend it in sort of extraordinary circumstances. So you got to take that care, right? You got to take that care and you got to take that accountability. But it's about also being completeness. And that completeness comes in with a two-way conversation.
Yeah, absolutely. And a lot of it is benchmark, a lot is comparison. When you're doing accounts on a set of accounts on resi investment properties, for example, there's a whole bunch of things you would expect to see, and you can match against it. And when you're missing it is when you can sort of move and push forward. But exciting times. Here we are, only 7 weeks away from end of financial year, the favourite time of the year for accountants, as I know. And this is the exciting part of property investment that you often don't hear much about. But what I would argue is probably the area of property investment which you probably hear the least about is the insurance side of things. And I must admit, it's not something I put at the fore when I'm thinking about my investments. The only time I ever really think about insurance is when something happens. That's typically when most people think about insurance. Again, a hot tip would be if something happens, you've got insurance, well, at least you can probably do something about it. If you don't have insurance, you're probably in the spot of bother. It is something you really need to put a lot of currency into. It's something that can be done largely sort of once a year or so, but you need to be connected with it. But I don't know how many people do try and do it themselves still on the phone, speaking to different insurers, price shopping around and still missing a beat. What I do and I've always done is use really good insurance brokers. They do the heavy lifting for you. They know all the unknown unknowns that you would have no idea about and all the big what ifs. So if you're not using an insurance broker, I'd encourage you to do so. But you might ask why. Well, I hope to solve that today with Munzurul. We've invited into the studio Rochelle Kettles, who's the Managing Director of KHI Insurance Services, part of the wider KHI family. Munzurul, Rochelle, how you going?
Thank you. Thanks for having me.
So you're from Cairns.
I am.
That's a long way from anywhere.
Yep. Cyclone-prone area, Cairns.
So you guys are responsible for increasing all of our insurance premiums all over Australia, aren't you?
I wouldn't go to... Well, you know what?
Is that a bit unfair, Munzurul?
Yeah, I think so.
There is an element of truth to it.
Yeah. You know, there's been a lot of natural disasters, hail, bushfires, floods. It has pushed prices up recently. Yeah.
Oh, you guys cop it up there. You're in the tropics. You get your fair share of challenges up there. So no doubt you're pretty au fait working with insurance. I know you do stuff Australia-wide. And by disclosure, I've only just started using a KHI Insurance Service myself. I have some insurance elsewhere. It's a relatively new relationship. So I can't yet report on whether or not I'm happy about it, but I'm big on disclosure here. So I've started using the firm. The team's been really good so far. You guys have just put into place an insurance policy for us on a property that we have up in Queensland. It's like a block of units. So that was pretty straightforward, and you came in cheaper than the mob I had it with beforehand. So I'm pretty happy about it.
Yeah, we try and make sure that the cover's there to start with, that you've got good cover, but try and help out with premiums where we can.
Did you like the process I went through to try and get that in place? Like, because I was a bit sort of cagey. I just went, look, this is it. I didn't give you the other quote initially, I don't think, which I don't really like doing personally. And I was like, can you do it? And you come back, I was pretty competitive, but you didn't have all exactly the same information I had in the other one. So like for like, you were cheaper.
So why we ask for your current policy is just to see what sort of cover you've got at present. And it's got a lot of underwriting information that we require to quote on that property for you. We don't come up with the numbers, the insurers do, but we just make sure that the cover's correct for you. And if we see something in your current policy that we don't think is quite right, or if the building sums, are too low, we go and review that and then have that discussion with you.
I think with the property you guys insured, it was under market value, it was underinsured by memory. I think we upped it by maybe $500,000 or something.
We did. Remember. It was a little bit underinsured. So that's where a broker will prompt their clients usually once building costs go up. And we've seen a large rise in building costs in the last sort of 3 to 4 years. Price of steel went up, and that just, made everything else go up as well. So we have been prompting our clients to make sure that they increase their building sums insured. So
there's a few things I want to try and work out with you over the sort of course of the next half an hour or so. Just getting the nitty-gritty of insurance for property investors, but as Munzurul well knows, a lot of property investors are also business owners, so it might be a sage reminder for them to reconsider how they're insured elsewhere. I don't believe you guys do life and TPD stuff. You do that in other parts of the KHI.
That's generally the financial planning group. So they do all of those life TPD, income protection, and sort of trauma.
All that good stuff. Yeah. Which if and income replacement, all that sort of stuff. So if you don't have those things in place, again, What's that business called within KHI? KHI?
The KHI Financial Planning.
Okay, yeah. Look, you speak to Munzurul, could probably set you on the right thing. But what I also want to do is dispel some of the myths and get to the nitty-gritty of it. Do you reckon most people, to my earlier point, it's pretty often overlooked, or it's not? It's the unloved part of property investment, isn't it? How does that make you feel?
No, and look, that's our job. You know, most people don't read the policy wordings. They don't even read the schedule half the time, and that's why we have to keep prompting about your building sum's too low, or So that's what we're there for. No one wants to read the policy wordings. Have you ever read one?
Yeah. Yeah, I have a bit of a weirdo.
You are weird if you've been reading them.
I have done. I must admit I don't do it every time, but I'll skim it to see if there's any. But I sit there and I just like, and this is a good question. Like, do you just assume that it's accurate? Like, or do you just assume if I've been insured with the same company for so many years that the policy disclosure is the same? Because I sit there and go, I reckon they've changed something, but how am I going to find out? Because they don't tell you what they've changed.
Yes, so they change quite often. You'll find on the back of them, usually there'll be like a reference number. So they're all numbered, and there'll be a date. So.
And Rochelle, is it fair to say that as it is with many other profession, right, you've got that compliance component and you also got that strategic component, right? So the insurance consultant, I almost see that as a compliance insurance component as opposed to someone who's a strategic. And someone who's a compliance is sort of all about is giving you a cost indication, the pricing side of it, how do we reduce the price, right? The price could be slightly lower, but how do we know what's been covered, right? And has it covered everything? Has it been covered in the right way? You know, the right thing has been covered, as you said, that in terms of that insurance policy.
That's such a big question, though, right?
Yeah.
It comes to the heart of bringing Rochelle into the studio. I might just start really simply because a lot of people are probably sitting there going, I just do my insurance and I move on. So we're talking about an insurance broker, then you talk about an underwriter, then you talk about the insurer.
Yep.
Like, what's the difference of all that?
Okay, so the insurer employ the underwriters. They're the ones who work for the insurer, basically, and look at all that information that us brokers provide to them.
Okay, so is the underwriter a person or a company?
Yes, a person.
And does the underwriter work at the insurer or does it work
correct.
external to it? Okay.
Yeah.
So an insurer is a company.
Yeah.
And they take on the risk. So you pay that company a premium, and in the advert, and that something goes wrong, they will pay for your stuff to get fixed.
Correct.
And the underwriter sits in the middle and
just
weighs
makes
it all up.
Yeah, exactly. A lot of it is automated now, but if something's a little bit, like in a flood-prone area or things like that, those policies will trigger a referral to the underwriter for them to assess, the flood mapping and things like that.
So the underwriters are the boffins that sit there working out whether or not premiums should go up or down depending on all the what-if events.
Yeah.
So I've been to I don't know if you've been there. Have you been to Lloyd's of London, Munzurul?
Lloyd's in London, not the actual bank, no.
No,
No,
there's a bell and stuff and all that. So,
Around,
but you go in there and it's just floors of like people sitting at desks and stuff, right? They're insurers or they're underwriters or they're both, are they? Just all sitting there working out what's going on.
Yeah, both.
Yeah, both. Yeah, so and then that so an insurer will determine whether or not they will take on the risk and the risk of something eventuating. So they sit there going, there's not that much risk in that, so I'll take the premium and just hope that risk doesn't eventuate.
It's probably more calculated than that.
Yes.
So let's say a house, for instance, right on the beachfront. You know, it's exposed to the elements. You've got a lot of things that could go wrong there. They will rate that quite high because it is right on the beach. Something near bushland, that's a fire hazard. So again, the rating could be quite high because it's surrounded by bushland. So there's all these different factors. You could have a 100-year-old house that's made out of timber. If it burns, it's going to burn pretty quickly
Yeah.
compared to a Besser block house or a concrete house. So all these factors plus all the claims, so whether it's theft, malicious damage claims, cyclone claims, flood claims, fire claims, all these things create, I suppose, the insurer's business model to work out, okay, in this area, brick homes, we're going to have to rate it as this. Timber homes, we're going to have to rate it as this. So it is quite in-depth. It's not just that area you're a certain rate and that area is a certain rate. There's a bit that goes into it.
So therefore, a broker will steer the conversation with a wide range of insurers, and therefore they're underwriters for you to find the right product or the right insurance
right fit.
product for a client.
Yeah.
So you work on behalf of the property investor in this regard.
Correct.
Yeah. Okay. The cynic of me says the insurer always wins. Is that typically how it works?
Well, look, we always want our client to win.
Yeah.
We're working for our clients. So if it can be covered under the policy, then we're going to push for that and read through the policy wordings when things aren't going right in a claim, or try and work out, how it should be covered, or, just giving them the right information.
So you'll make sure you'll take all the different facets and aspects of a property and shop it around to a whole bunch of different people and see. So you've got to weigh the balance of does this policy satisfy most of the needs of this property or property investor with an eye towards the premium. So you can insure for everything.
Correct.
Can the premium be high? You can insure for a lot lower and the
Correct.
premium be lower. So
you work
you've got
out
to
that
get it.
balance.
Yeah.
Correct.
And how do you know you got the balance right in that regards? Like you're going to tell me because you've been doing it for so many years and also, but how do you know?
It depends on the client's financial position as well. So,
Good point.
if we're doing business insurance, they might want to self-insure some components with business insurance because they're like, look, we don't want to cover the computers. If they fail, we'll just buy new ones.
Yeah.
Okay, so there's certain things that you can self-insure. With residential landlord property, it's, you might say, look, I don't want loss of rent or I don't want malicious damage. But for the small extra price, we recommend that you have that cover.
So it's reasonably standardised. If you're buying an inverted commas standard piece of real estate in a standard location, there's not too many different moving parts. It's only when you step outside the norm and maybe have something which is close to water, close to forests, in cyclone-orientated locations, that sort of stuff.
Yeah, sometimes they may exclude flood or they just may decline to cover entirely if it's too high of a risk. But people always say, why is this insurer $6,000, this one's $3,000 and this one's $2,000? It depends on the insurers and how many claims they've had. So if they've written $10 million in insurance premium, but they've had $8 million in claims, their margin's getting very slim once they pay their staff. So it's a business model at the end of the day.
And the thing is that you want your insurer to have financial integrity, right? You don't want to be paying an insurance claim and then they go,
correct.
We can't afford to pay it out.
Yeah.
So you want your insurer. I've actually got shares on the ASX in insurance companies, and they go pretty well. But
Phil, from my point of view, is that before Rochelle, you sort of came in and you joined us for quite a bit now. Is that many years with those investment? I still remember that when we had that flood in Queensland a number of years ago. Right, and I was with a very big insurance provider because the myth in my mind and the prejudice is that if I were to go with a big name, then that should cover most of it, right? You don't when you ask Phil that, do you read the contract? Phil says yes. I would say no, I haven't actually read the contract, right? Most people don't read the contract, Phil, and I didn't, right? So I was like, all right, I'm going to go with someone really prominent and everything will be covered, all good. And I remember that on the news and everything was saying that the flood is coming in through the whole Queensland, everything will be down. So I called the insurance group and it was not with the broker, directly to the insurance. And I said, guys, the flood surely is covered, right? And they said, well, it depends. Depends on which insurance, depend on which policy, depend on which area. And we got to go through every one of your insurance to answer that question. I was like, you're not helping in terms of the stress level, right? So
on a call centre, no doubt. You wouldn't have had a client.
It was a call
mate,
centre, right? It was a call centre. And that's what the benefit is of someone who's professional, who actually knows it. Even that comment that Rochelle just said, all the exclusion, to know what the exclusions are, right? So if I have the property in, say, Queensland, I don't want an exclusion on flood. I don't want an exclusion on cyclone, and I don't want an exclusion of, probably don't want an exclusion on fire anyway, right?
No.
So it's one of those professions where there is an additional assumed measure of trust, right? Like to your point, Munzurul, like
Yes.
if you're engaging an insurance broker, there's just an inherent assumption that you're going to get it right.
You've got to trust your broker.
You've got to trust your broker, right? So the question then is that how do you know your broker's any good? Like, I don't know. Like it's only when it really gets tested in a claim and you go, well, you missed that, you know. I don't know. Maybe I've had a couple of things, but how do you like? What would be?
Our business has grown on referrals from good referrals. So yes, a lot of clients who come across, someone has recommended us, and they've put out their trust in us, I suppose. Yeah. So. Yes, it's having a good accountant, a good doctor, a good lawyer. Same with your insurance broker.
Yeah. And are you Cairns born and bred?
I am.
Okay. How'd you end up doing this?
Well, I used to work at a bank.
Okay.
And I got poached by our client who was an insurance broker.
Okay.
Right.
There you go.
Yeah.
What were you doing in the bank? Like in the teller and stuff? Or
yeah, I was like the supervisor for the tellers.
Wow. And is banking, like high street banking, still alive and well up in Cairns? Like the people still walk in the bank branch?
Yeah, well,
I imagine it would be.
A few, but they're starting to close. A lot of them are starting to close. There's probably half the amount.
So how long have you been an insurance broker for?
Nearly 20 years.
Okay, so quite a while.
Yeah.
And you still like it today as much as you
there's always a challenge. There's always something different that's happening. Because we do business insurance, we deal with doctors, lawyers, tradies, nurses, cosmetic nurses, a broad range of different occupations. So we had one lady who she goes and collects koala poo.
Okay.
So it's like,
that's her job.
She has a dog that's trained. Yeah.
So you
at a wind farm.
You must get to learn a lot about every single industry and profession.
Yes. We do.
What's the most abstract, and I know I'm getting away from property investment. We'll talk about business insurance, bro. Yeah. What's the most abstract sort of professions or businesses you everything's is everything insurable?
One was you're like, okay. And her dog was trained to go and find how many animals were around the wind farm and if any animals had died at the wind farm and to do all that research. So that was we get different ones all the time, but off the top of my head that one was
pretty abstract.
Yeah, it's like, okay. Yep.
So what's the like a normal day look like for I know you're sort of managing director up there at KHI Insurance Services, but no doubt you're still on the tools. What's like a normal day look like for you?
Oh, it's never the same.
Yeah, okay.
Never the same. Different inquiries for different things and different challenges.
How much of it would be putting policies together for clients versus dealing with issues related to insurance claims?
So we've got a staff member just dedicated who has had 25 years experience as an assessor previously.
Okay.
So he used to work for the insurance companies, assessing the claims and making sure that they, are moving along. So we've acquired him at the start of the year, which is really good. Especially for our clients, just making sure the claims process is smooth for them.
So, if you've got an insurance policy on a property and there's some significant damage to it, for example, you'd call you guys up and say, "I've got this problem."
Yep.
You guys are sorted out.
We lodge it and we facilitate it from start to finish.
So what authority would you need in order? I'm thinking as a property investor, which I am. What sort of authority would you need to do that, or is that authority assumed at the point of time you take the policy?
That's just one of our services that is free.
Okay.
So that's an additional benefit of having a broker rather than going direct with an insurer. We're working for you for that claim. Whereas some people will go and lodge a claim direct, and if they say the wrong thing or give them the wrong, if it's not portrayed how it should be, that could be detrimental for the claim. So that's where our experience comes in. And
the cynic in me says that insurance, if they can find a way to not pay the full claim and or a portion of the claim, they will do. They'll look for loopholes to try and minimise their exposure. And I'm just a simple journalist, but so you've got to be quite careful in your interaction with them. So the point is, and I've had it before where I've had to claim on something, they've gone, well, you need to speak to an insurer, and I go, it's the last thing I want to do is spend my time talking and putting an insurance claim through. It's tough work, and it's
correct. So with some of the flood claims that we had just over a year ago, some of those claims we spent over 100 or 200 hours on.
Really?
So people don't have that time, and it'd probably take them twice as long. But the houses that were gutted and stuff, constant phone calls, making sure they're okay, getting them in alternate accommodation, just making sure that their claim is progressing, talking to builders, assessors, the insurance company. So there's lots of moving parts and all the different trades that are going in there. It can get quite confusing if you're not, knowing all the steps.
So how do you manage that on a sort of basis of you might be sort of overseeing a number of different claims at any point in time, all different stages and different significance, like
documentation.
Yeah.
Yeah.
So you're going to be super organised.
Yeah, documenting everything, and having a good memory helps as well. Yeah.
I suppose the product knowledge as well, right?
Correct.
In between all the different insurance, and particularly when you're sort of saying that this sort of things changes all the time, right? Because the more and more we speak about insurance, more and more in my mind it comes in, it's that risk mitigation. On the business side of it, we speak quite a bit in terms of having a buffer, having a risk mitigation, and having a plan Z. Things goes wrong. This is a risk mitigation, right? It's one of those things that we don't discuss daily.
It's a huge risk mitigation, and the most obvious question to ask you is, why do you need insurance on a investment property?
The banks require it.
And that's a really simple answer.
Not a lot of people buy properties with cash.
Yeah.
Financiers require you to have insurance.
Yeah.
It's an obligation under your loan.
And you normally need to cite the lender on your insurance policy.
Correct.
As well,
We issue a certificate of currency for them.
Yeah. And normally it's a precondition of settlement, right?
Correct.
Yeah, so you can't actually settle a property without the insurance.
No.
And then there is a certain amount that the bank wants you to insure as well, right?
Yeah,
there is a bare minimum.
Depending on their borrowing, is whether they require a certain building sum insured. So if you've only got a small deposit, usually they will want to make sure that you're definitely insured correctly. They're probably a little bit more relaxed with someone who is probably more financially stable and they've got a big deposit. But it's about the banks being able to recoup, or that client being able to rebuild if the house burns down, and they're not going to be paying off a loan with
property that doesn't exist.
Correct, and there's no income coming in because they can't rent the property out.
And that's the issue, because then if a borrower defaults on the loan as a result of that, and then they just walk out, and the bank's got to try and recover the debt that's owed, which will be the foreclosure of that if there's nothing there to sell.
Correct.
It's a big deal. So that's a really basic reason why you need insurance. But I would imagine there's a huge amount. There is a huge amount of responsibility on landlords around the risk connected with being a owner of property. People can get hurt, people get electrocuted. There's all the risk issues around that. But then there's also protecting your asset because you can be out of pocket.
Correct. Like if someone got electrocuted at your property, let's say, for instance, they could try and sue you. Yeah, especially if it was like, the PowerPoint had come off and we'd, told you about it, but you hadn't got an electrician there yet because you couldn't get one there, and the child got electrocuted. That could be a liability claim.
Yeah. That's a sage reminder for a lot of property investors where they sit there and might be a bit tardy with maintenance and stuff, and you do have a responsibility. Whenever I see stuff come through which is electrical, I'm like, okay, get that fixed straight away, right?
Yeah.
But you know how it is, with a large portfolio, Munzurul, do you jump on every single maintenance request immediately?
No, I mean, see, that's where, again, in the balance sort of comes in, right, that everything is sort of balanced out. And the comment sort of comes in is that how do you know that each decision that you're making, that you've got the balance right? Sometimes you underdo it, sometimes you overdo it, right? Because see, one of the things which was coming in my mind when you were speaking about the insurance is that it's not about just having the insurance, it's also having that right amount of the insurance. So what Rochelle did is that when Rochelle has taken over my insurance, I've been doing this insurance many years, many of those properties, and Rochelle picked it up and Rochelle says, Munzurul, some of those properties that I looked through and some of those seems to be the quite bit low insurance. When I took that insurance, it was the right value in terms of the building insurance. But because the cost has gone up so much, is the replacement cost is much higher than what my insurance is. So while I do have it, I sort of don't have it, right? Because I still cover a certain percentage. So that's where, again, comes in that a strategic advisor who sort of goes a little bit beyond to it and say
and that's
that
the
we'll
point
review.
between process and strategy. So would you say, Rochelle, that you should always be insured at the replacement building costs as some basic tenants for property investors?
Replacement.
No, that's not tenant as in a tenant as in like a principal. Yeah.
So, replacement value of the building plus a buffer for, knockdown costs. When you rebuild a property, it's got to be to code now. So if you've had a house that was 1980 built and it burnt down, you can't build it exactly the same because whatever that council says is code now, you've got to build it to code. So it could cost another $100,000. Some areas in Cairns, they've raised the Q100 level, which is the flood level. They've raised that. So now if, say, one of those houses in that area floods, they've got to rebuild it, but they've got to build it, the property up 100 mil or 200 mil or whatever it's got to be built up.
So that gets expensive. So you went through the process. Was your philosophy, Munzurul, was get everything back up to replacement building cost plus a buffer?
Yeah,
You've done that?
and look, to be fair, I think there is still some gap within my own portfolio and Rochelle is working through. But in theory, that's what one needs to do, right?
Yeah.
It's not so much the original price. It's not even what the bank is sort of saying, the bare minimum. If the bank is saying bare minimum this, we do that, right? But I think the comment that Rochelle says is so fundamental. How much would it cost us to replace that asset now? Plus the demolition cost, plus the new sort of the requirement, right? And all this needs to be covered. And if it's not being covered, it doesn't work. I'll give you an example. I've got a recent property of mine, unfortunately, got burnt out. And it's like the whole house got burnt out. And then someone did something and it got burnt out and the gentleman is on the jail and sort of the house is fully burnt out, right?
You went to jail for burning your house down?
That's right. And a few other things
God,
that
don't
he did.
laugh about it.
And
At least you get a new house.
and few other things the gentleman did, right? No, Rochelle jumped into it straight away and Rochelle looked into it and it's a property in Caboolture, right? Rochelle jumped into it, looked into it. We entitled to all the insurance, absolutely no question. But when I look back to that amount, I still sort of find that it's still quite a bit shy. Quite a bit shy in terms of the reconstruction. But when I did do that, it was a bang sort of a number. We increased that over a period of time, but the fact that the prices have gone up so much,
Correct.
the construction price, there is a gap. So there is that genuine layer of the risk.
Yeah.
And with the right level of the insurance consultant, is that just having to review this and just giving that second opinion, almost giving that prompt to you, I think that's valuable.
Well, that's the sort of trusted strategic advice that a good insurance broker can provide. When should you do that sort of work, Rochelle? Should you just do it at renewal every year, or should you, if you've got a large portfolio, should you maybe get another insurance broker to have a look at it for you?
Look, we can review policies at any point in time. Usually people will do it as they fall due for renewal. But, yeah, reviewing them, if you haven't looked at your building sums for, in the last 3 years, CPI increases just probably aren't cutting it.
Yeah.
Yeah, and I remember the policy. The property that you just looked at for us, that unit block up in Queensland. Even the number that it's insured at right now, as in a replacement of the building, I sort of sit there and just go, "Man, it costs so much more than that to build it, right?" Like I don't know. I don't know. It's sort of it's got me thinking whether or not I've underinsured it. Got the policy here in front of me. Maybe we can have a chat after.
Then Phil, it comes back on the balance in the sense that when you have got a larger portfolio, you sort of say, and what do I do? Do I do everything to be 100%, 110%? Yes, that's conservative, right? But on the other side is that you've got the premium cost, right? And the premium cost are multiple.
Yeah.
And what is that layer of the balance, right? So,
it's a real tough one with insurance, and I still don't reckon I get it right. I reckon most people probably don't get it right. It sounds like you don't get it right. So don't beat yourself up over it. So very broad. So just sticking with insurance for property investors at the moment. A lot of people who are new to property investment tuning this podcast, and it's sort of their first foray in. What are the sort of the key sort of aspects of insurance you need for property investment, like real basic stuff?
So you're building, obviously, if you're furnishing.
So the building is if the building burns down,
floods,
a car hits
storm,
it. Yeah, storm, like a roof gets ripped off in a storm. That's building insurance.
Correct.
Okay.
Yeah.
And then that's the structural stuff.
Yes.
Yeah. Okay.
Correct.
Yeah.
And then contents is usually your carpets, window furnishings, if you furnish the property at all, that sort of thing. So we'll always put a little bit of contents on for the carpets and window furnishings and things like that.
So like the kitchen and the oven and all that sort of stuff?
That's part of the building.
That's building insurance.
Yeah.
Bathroom fit out. So
Correct.
all the fit out costs is building?
Yeah.
Wardrobes, all that sort of stuff, building?
Correct. If they're physically built into the...
Yeah.
Yeah.
Okay. And then contents is carpet, curtains or blinds.
Yeah.
Light
furnishings.
Light fittings and all that, or is that building as well?
Well, it's normal. Yeah.
Building.
Yeah. Building.
Okay. So there's building and contents.
Correct.
Okay. What else are the
Then
key?
you've got your liability, your public liability.
What's that for?
So if a tenant slips down the stairs and they try and sue you, or again the electrocution side of things, if they got zapped and they try and sue you, there could be multiple things that lots of different scenarios, I suppose, that could happen in that instance. And liability claims, we're talking big dollars.
Do you get many of them? Like, put that in sort of perspective for me.
Not under house, but business, we get a few.
Yeah, okay.
Yeah.
So in the house, there's not that many.
The challenge is that when you get those once in a while, it becomes quite substantial. So I had an incident in Queensland many years ago, number of years ago now, right? This sort of a double story, and the kids were having a couple of drinks and they were playing around late in the Friday evening. And when I say kid, these are teenagers, young adults, right? So one of the ladies, young adult, she's 19 years old, she actually fell off from the veranda. It's double story. She fell off, she broke her arms and legs. And I got litigated that apparently the veranda was not high enough of where it should be on the safety side of it. And I was like, who goes around and checks it, whether it was high enough? It was being purchased as a second-hand property, and wherever he was how he was. So the first thing my insurance broker says is that, look, you've got the public liability insurance, so that ticks it. Now, in my case, I was fine. It was being found that it was from their point of view.
Yeah.
But if I wasn't, it's just having that public liability insurance. Many of those claims are substantial.
But this is one of the issues because regulation, like codes, keep changing, and I know the balustrade heights have changed over the years, right? Like it might have been a code at a particular point in time, but is it when it was built, or is it at the point in time, right? So it might have been
But
Act
who
code of them.
actually checks
I
it,
don't
right?
know.
When you buy those
Who's supposed to check that
knows
stuff?
those
You
things?
don't know. Look, electrical, obviously, and smoke alarms and things. The real estate agents are onto that now because that has changed over the last few years. But yeah, like I said, codes keep changing. Building codes change. They change from state to state. So
Yeah.
It's
And
hard.
this is, we speak about it a little bit on this podcast, Rochelle, this notion of property investors seen as these sort of rich, wealthy people getting rich off people, renting their properties and stuff. Like, it's fraught with, it's a lot of risk all over the place, right? Like, you get sued at any point in time for someone getting pissed and falling off a balcony, Munzurul.
Exactly.
I'll use my language, not your very kind language. Like, you just go, well, you weren't drinking, you wouldn't have fallen off
That's
the balcony.
exactly what they were doing.
Yeah, of course. And it's about, but you're insured, so you're mitigating the risk, and the risk there is the unknown, whether or not Munzurul's thought about the balustrade height is the right height or not.
Yes.
Like, you never got to know. So,
and it could be
you can
something
cover.
as simple as balustrade giving way.
Yeah.
You're leaning on it and it gives way.
Yeah, and you get these repair sort of requests coming in all the time saying, oh, the bottom stair is a bit slippery
Yes.
because it's in the wet, and you sit there and go, well, just stick a bit of like sandpaper to it. Like, you know what I mean? Like, but there's an incumbency, and this is where your property manager is critical, where you got to take their advice and go. But in the balance, you got to sit there and go, it's probably okay.
And when we speak about those sort of a risk side of it, right, we sort of say that there is nothing which is ever 100% risk-free.
No.
But it's all about creating that different layers of the mitigation with the risk. So one layer of the mitigation is that, yes, you've got the property manager who takes care of it. And the second layer of the mitigation is that having that insurance consultant is that at least you can have that conversation. Like your experience, I don't have that experience on day in, day out basis with the insurance. And if you see some of those things, you raise it, right? And
Correct.
that mitigates the risk.
Yeah.
So building, contents, liability, and most liability is like $20 million, right? It's pretty standard with
Yeah,
most
20,
policies.
30, depending on the insurer.
And the insurer. And then, so there's other stuff. There's like,
Malicious damage, loss of rent, tenant default.
okay. So
Accidental
malicious damage,
damage.
like kicking your door in because
Yep.
for whatever
Yep.
reason, that's malicious damage.
Yep.
Loss of rent is,
So if there's a fire in the kitchen and now the house has got to be cleaned and repainted, new kitchen put in, things like that, and it's not livable, we'll put your tenants in another property.
so it covers them moving somewhere while you get the thing fixed.
Yes,
Yeah.
depending on the extreme of the damage, I suppose. Like
Yeah.
if it's just one bedroom and they can still sort of manage to live in the property, if it's, there's only one bathroom and the bathroom's damaged, then they can't obviously live
So this is
there.
when the practicality application and people assessing going, yeah, this and the other.
Correct.
Like an assessor will come over with his notepad or her
Yeah.
notepad and make a call on it, right? And that is
Correct.
the representative of the insurer.
Yes.
Yeah, okay. And if someone just defaults on their rent or just goes, I'm not paying my rent anymore, but I'm staying here, that's all insured as well. That falls under.
So they have got a lot of rights, as you probably know, being property investors.
Yeah.
The tenants do have a lot of rights. So, and it takes a long time to get them out of that property if they default. I believe you would.
Can be, yeah.
Yeah.
Be a nightmare.
Yes, correct. So basically what the insurer does is once the bond has been used up, then they pay the loss of rent up to however many weeks it says in the policy wording.
Okay. And this comes down to the policy wording. Someone needs
Correct.
to read it and tell you. So a good broker will tell you all these important bits.
Correct.
In a summary.
Correct.
But as a property investor, you need to know what to look out for. So that would be the key things around it.
Yeah.
So how will they spell out really quickly whether or not it excludes stuff like flood, cyclone, or bushfire? Is that you got to weed through it, or?
No, look, it should be on your schedule.
Yeah.
All the insurers we use cover all of it.
Yeah.
I won't write a policy that doesn't have flood or doesn't have cyclone cover or, I want my clients covered correctly.
So there'll be some areas, and I can think of one in general. I've got a property in one place that is not covered by flood. It's impossible for it to flood, so it doesn't bother me.
Yep.
But the area where it is it's a valley that gets flooded, so nothing in the valley will be insured for flood. What do you do about that? You just go, well, that's just the way it is, or do you reckon you can work to get insured for flood, but you just have to pay for it?
Correct. So most of our insurers will get one to do it. It's just whether you want to pay it or not.
Yeah.
That's yeah. But
That's a
you know,
call you need to
normally,
make.
normally we'll get multiple quotes in flood-prone areas.
Yeah. And what's the key one that you should be most concerned about? Is it flood, or is it? It depends where you are, I guess, isn't it? Malicious damage is a big one as well. So a lot of insurance policies don't cover malicious damage.
Not automatically, no. No, you've got to select it. A lot of direct insurers, you've got to select it usually.
So it's in addition to the premium. So
yeah.
So malicious damage might be one. What would be some other ones that you need to opt in for with
accidental damage.
Okay, accidental damage being someone didn't maliciously wreck something, but it got wrecked because of someone's actions.
Yeah, correct. So a client of mine had a freestanding carport. One of the ones where it's got iron on top and bottom and foam insulation in the middle, it collapsed. And they were trying to work out why. And they went up, they inspected it all, and there was dents in the roof. And we worked out that the tenant's kids had jumped up to get a ball. So they've dented the panels, which then we had a huge downpour. So that foam all filled with water and
it got heavy,
collapsed.
And wrecked it. Yeah.
So it wasn't classed as malicious damage because they didn't intentionally do it. It was accidental damage. So a lot of landlord policies aren't accidental damage. So that's something to look out for on your policies.
Okay, so lots of detail there in relation to resi property and commercial. Would, again, same but different again, but most commercial policies are covered by the tenant, correct?
Usually it's written into the lease that they have to.
On triple net lease things, so you don't normally pay the insurance, and or if it's strata complex, it might be a strata.
Correct.
What just on that basis then, if you've got units as residential investments, your requirements around insurance probably a lot smaller. It's probably just internal contents.
Bit of contents, your liability cover.
Probably loss of rent as well.
Yeah, loss of rent, your malicious damage again.
But the building typically is insured through the strata.
The strata.
So how do you know? I've picked through strata reports. You must have done before. How do you know whether or not the building is insured correctly? Like if you're not on like a body corporate or anything, like you would assume that they've got the obligation to ensure that stuff is insured properly.
Yep. So you could request if they've had a valuation done lately, because a lot of the insurers now are making sure that they've had sort of a valuation done in the last few years. So every sort of 3 to 5 years, they will usually ask for one, just to make sure that building sum is adequate.
Yeah, I've seen some really underinsured tenant blocks. It's like you sit and just go, there's no way they'd be able to fix it. And people like to dip into the strata funds to get their stuff fixed quickly when it happens. But so we've spoken a lot about property. Let's touch on business insurance. And a lot of property investors are self-employed business people. You must see that. It's a really nice way for people to manufacture wealth, make your money in business, park it in property. Munzurul is what they say. The key, this is a big part of your bit. Do you do more business insurance over real estate insurance?
Yeah, probably about 60% business.
Okay. So what would be the core business insurances that you need to have?
Depending on your occupation.
Yeah.
Yeah. So professionals obviously need professional indemnity, public liability. Management liability is a big one that we're seeing more and more businesses. Anyone with staff should have management liability.
Yeah.
Haven't seen a lot of claims.
Management liability being so a manager does something inappropriate or wrong.
No, it's even like with tradies, occupational health and safety or workplace health and safety. We had a scenario where there was like a workplace death. It's getting investigated. They could potentially get occupational health and safety fine from that. So that fine and penalty is what would be covered under a management liability cover. If your staff member injures themselves at work, so you have your work cover, which would pay them weekly or fortnightly.
So that's your eye care stuff, right?
For here.
In New South Wales,
Correct.
yeah.
But we've had a few scenarios lately where the staff member are suing in addition because they're physically and mentally traumatised by the event that occurred. So they're suing for a lump sum. This is where your management liability comes into play and will protect the business and the directors.
Yeah. This is the issue these days. 97% of all businesses in Australia are small businesses. And again, to get on my high horse for a moment, business owners, the red tape, you see it every day, the red tape connected with it, and the liabilities around it. Why would anyone want to go into business for themselves, speaking hypothetically? When every step of the way, someone might try and sue you or this, that and the other, and, they're contributing to their tax coffers, but, geez, they make it tough. So workers' comp.
Employee issues that we've just discussed now, I haven't seen a lot over the years, but in the last 18 months, it's, I'm talking to clients on a weekly basis about an issue that they're worried about, potentially.
And I'll tell you who likes having a fight about these things, and it's the lawyers connected with insurance firms, and they have a good old field day arguing over these type of things.
Well, look, this is where the insurance, the insurers have legal firms and lawyers that work for them. So they're there to give you that advice surrounding this because they want to try and mitigate the loss as well. So they're there to make sure that they don't have to pay out more than they need to, which is protecting the client.
But, with the right insurance consultant, there is so much value that one can add. So workers' compensation as one example, right? Because very often the premium is sort of defined on that layer of the risk, which profession that you are in.
You can actually get fined if you don't have workers' compensation, and the government find out that you've got employees and don't have workers' comp.
Yeah,
that's right.
You can get fined.
But even with the employee side of it, let's say as an example, the building industry, right? So someone who's sort of sitting in the office as opposed to someone who's actually being on the ground and sort of having that hammer side of it. It's two different sort of the area and the risk profile different and the cost is different.
The costs are huge for any manual labour. Correct.
Yeah, it really adds up. So business insurance, so that's the equipment that you have. That's another key one. What about cyber insurance? Because, I hear a lot of people talk about this and sort of, scratching the surface in and around aspects of this. People say it's not worth the paper it's written on. And there's a lot of cyber policies which exclude acts of state-based, actors. So if someone can prove that there's been a cyber incident and be able to track it back to a state, no one pays up.
Yeah, look, it's one of those policies, again, a bit like management liability. It's more and more businesses are taking it out because they're getting hacked. If big companies like, Medibank Private and those types of Optus can get hacked, you and I can get hacked.
Yeah. Oh, it's a good chance. It's just whether or not the cyber insurance will sort of pay out any claims. That said, though, it's in order to do business today. Another small business issue is that in order to get contracts, a lot of larger companies will not allow you to be part of their supply chain unless you have sufficient public indemnity insurance, sufficient cyber insurance, and other things as well. So it's a price of doing business now.
And look, insurance will not cover you 100%. We try and cover you as much as possible, but there's always going to be, little areas. But again, it's trying to mitigate losses.
So here's probably an area where a lot of people may be underinsured, Munzurul. Maybe you can give a view on it. If you're a property investor and you're investing in property inside of a trust and or a company, do you need workers' compensation?
Yeah, good question. Good question. The answer depends on is that whether you are a property investor or whether you are in property as, I suppose, in a business as a trading as such.
Yeah.
So when I look into that trust, do I have salaries and wages? Do I have any other management fees?
If you're paying salaries and wages and management fees out of a trust, you need
then you do need all of those, right? You need the workers' compensation and so forth, right? Sometimes the trust is being used as a service trust, and that service trust may also own multiple properties as well. So again, it depends on the individual circumstances. Is it more as an investor? Then you go through all of those buildings and sort of your loss of rent and malicious damage and all the rest of it. But are you on the business side of it? Then all this public liability and the workers' compensation and the indemnity insurance, all of those is being there.
Yeah, so I'm quite risk averse, and I even pay where I hold some real estate assets inside of a trust. I actually pay for workers' compensation inside that trust, even though it doesn't actually functionally employ anyone at the moment, but just to have it if it's ever considered the fact that I was doing work in it for the purpose of it.
And
and you pay the minimum. The minimum's not a lot, like it's in New South Wales. Like
that's right.
It's hundreds of dollars, annually, but it's a risk minimisation to have as a just in case, and or if someone's working for you on that basis, you
That's
never
right.
know.
That's right. And one say that, of course, there is a tax deductibility to part of that.
I was going to ask you
well.
about tax because you are an accountant. All of this is a tax deduction.
These are all. And naturally, you don't do that because of the tax deduction. No. The tax deduction just comes in as part of the sort of the sweetness, so to speak, right? But on the business entity, it takes away 25%. Individual, it takes away a bit more. Trust, it may take away a bit more as well. Yeah. But if you look back on that workers' compensation as an example, depending on how involved and complex that one want to go and how deeper one wants to go, some of those costs may not be as high, right? And if you have one or two of the employees, it may not be as high. But what is it's protecting in the longer period of time? You need that one incident at a point of time, and that could be hundreds and thousands.
Correct.
So we'll probably pose more issues than solved some questions or challenges. But what is clear is that you need, like most things, as a property investor, you need to surround yourself with the right people. And I would probably argue is that insurance is probably something you should be doing yourself because, number one, you probably don't know enough about it to do the job effectively. And number two, it's probably not worth that your time doing it when someone can do it better than you. So if you're not using a broker, start using a broker. I know you're based in Cairns, but KHI Insurance Services is Australia-wide.
Australia-wide, correct.
Yeah, okay. That's cool. And it's something you can easily do over, doesn't matter where anyone's based, right?
Correct.
It's cool.
Yeah.
Okay, cool. So are you doing a lot? I know you're doing my insurance now. You're doing Munzurul's insurance now. You're starting to pick up a lot more investor-based stuff, no doubt, under the KHI banner. Okay.
Yeah, and businesses, like you said, a lot of them are business owners, so we're also looking at their business insurance and their properties as well.
And you're happy, and I know a lot of people go, I've used my broker for so many years and we've always used them and this, that and the other, and, hence my question, how do you know your broker's good? But you're just happy just to cross-check or look at someone just...
Correct.
Something's not right, you're happy to just check someone out?
We'll review it, and if what you've got is adequate, we'll say, yep, they're doing a good job.
Yeah, that's cool.
So, we're
that's
pretty
good country
honest.
honesty, that.
Yeah, we're pretty honest. But if we find
very
things...
transparent as well, right?
Correct.
In the sense that if the other broker sort of comes in with $1,000 premium, and he's sort of coming in more or less saying that, well, look, that's probably the best that one can be,
correct.
then we communicate that is what it is.
Yes, we do.
Yeah.
We do. We're very honest like that.
What's the best way for someone to track you down, though, if they want to have a yarn to you?
On my mobile.
Okay. What's your mobile number?
0414 082 989.
Okay. We'll make sure we get that put in the show notes. And I've worked with Rochelle and your team. Who's the lady in your team who's been
my daughter, Shaylee.
Is Shaylee your daughter?
Yes,
okay.
she is.
She was very good.
She is good.
Yeah, she was really good, and she put up with me. So that's a long way to doing it well. But no, thanks for coming down for the chat. I know it's before we jumped on air, I was, a lot of people think, that's Queensland, right? Like Queensland's a big place, and I've used this stat before. It's the same distance between Melbourne and Brisbane than what Brisbane is to Cairns. So you're a long way from the capital up there. But, Cairns is the capital of, I reckon Townsville might say this, but Cairns is really the capital of northern Queensland, isn't it?
Yeah. We like to say we are.
Yeah, that's good. Nice one. Well, thanks, Rochelle, for coming in, Munzurul. Thanks for
Thank you very much.
So who's next? Who are you bringing in? Who else are you going to surprise me with? KHI.
And we've seen so many people, right?
I know.
We've seen the accounting and financial planning and bookkeeping and the mortgage broking and the law and the insurance.
Who else is
the
there?
charity we've seen, and we have someone very special coming in next time.
Okay.
That's our old friend Ross Lequens.
Ross Lequens.
And Ross Lequens is joining us as a buyer's agent.
Wow. Is that public knowledge now? Is that a news flash?
That is being public knowledge, and it's sort of done all the registration, being in the open world, running around in different places, and Ross can give you all those places.
Well, I know he's bought a lot
around.
of property over the years, and he knows strategy and mortgage finance inside out. So I think he'll do well in that.
We're very, very blessed to have Ross.
Maybe we
with
should
us.
go up and
Very
see
blessed.
him. I'm going to be up in the Gold Coast a couple of
All
weeks.
right.
Yeah, I might
Okay.
say hello to him.
Excellent. He's doing
And
well.
if you're tuning into this, Ross, look out for my call. But yeah, we'll do that. And you can contact the team over at KHI Munzurul. Best way, just khipartners.com.au. Can find you there.
That's
and
right.
or sort of info at or admin. You like admin at, do you?
Yeah, we also speak whether it's admin khipartners.com.au or hello khipartners.com.au.
Hello at khipartners.com.au or admin at khipartners.com.au. If you want to have a chat with anyone over the team there, you can probably start with Munzurul. You're not
Absolutely.
too busy to talk to
No,
people
no.
these days.
There's always time.
It's always time. It's always time. Good. I really enjoyed the chat. It just sort of reminded me I've probably got to spend a bit more time and energy on my insurance. So
Thank you for having us.
I'll get onto that at some point. This is In the Balance. So if you just found us, welcome. A whole bunch of other episodes you can tune into, looking at all the different aspects of creating wealth, largely with property as the vehicle to do so. That's the lens at which we frame this chat and this narrative, and hopefully it's resonating with you and helping you make more informed decisions. We'll see you again next time. Until then, bye-bye.
Thank you.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.